Hello and welcome back to Dukascopy TV. Now, amid the tensions surrounding the euro, investors are flocking towards the Swiss currency, seen as a safe haven. Today I'm joined by Osmond Plummer, independent wealth management consultant, to talk interest rates and currency caps. Mr. Plummer, thank you very much for joining me today.
You're welcome.
First of all, let's start off with a quote. This quote is from the president of the Swiss Central Bank, Thomas Jordan, who last week spoke about the Swiss economy. He said, "At the moment, the minimum exchange rate is the right response for Switzerland to the crisis." Now, in your opinion, is the rate cap the right decision at this point?
I think it was essential that something was done. The Swiss franc was experiencing effectively an asset bubble. As many euros and many dollars, the money supply there is much larger. And they were flooding into the Swiss franc, and the Swiss bank had tried to stem the flow of the currency, and then it decided that it had to make a statement. We'd got to almost parity with the euro, and they said, we will draw a line in the sand here, and we will spend anything it takes to keep that peg as the absolute maximum for the Swiss franc. I think that sent a very healthy sign of, beyond this line, we will not allow anything to move.
And will we see capital controls of the Swiss currency, do you think?
I don't think that would be helpful. I really think the Swiss authorities would resist that at all costs. Capital controls on the Swiss franc would completely conflict with the open banking culture that has been in this country for many years, and would cause fair chaos, I think, in the currency markets. So I think that will be resisted, very much so.
And the last cap that was set last September at 1.20 Swiss francs per euro, do you think that that was the right policy to make?
I think that the Swiss National Bank had to set a number, and it had to set a number that it could reasonably defend. Whether 120 is the right exchange rate for the Swiss franc is an entirely different thing. I think the Swiss franc really, by any measure, remains at least 25%, maybe more, overvalued. But if you tried to set a cap at 150, I think there would have been much more market resistance at that point, and that cap then may have failed.
I see, and there are lots of other ways to manage currencies that they do throughout the world, such as Singapore's multi-crawling currency, Denmark's long-standing crown peg against the euro, and Sweden's free-flowing currency. Would these strategies, would they just not work in Switzerland?
I think effectively you have a majority free float with the Swiss franc. I certainly, given the current economic circumstances in the euro, wouldn't favour a straight peg to that currency. We honestly don't know quite what the future is holding for the euro still at this stage. Singapore has always actively resisted the internationalisation of its currency, and that it has been successful in doing that. Switzerland's always been very open to international trading of the currency, and I think it will continue to do that. The issue at stake has been simply a question of supply and demand. There aren't quite so many Swiss francs out there in the market compared to the number of dollars and euros looking for somewhere safe to go.
Yeah. And do you feel in this current economic climate for the world that the Swiss exporters can cope with the current exchange rate?
I think if you are essentially a domestic Swiss creation with most of your expenses in Swiss francs, you're having a very difficult time right now. Yeah. A lot of multinational companies, of course, have operational hedging. They manufacture in different parts of the world. And even if you have a Nestlé with its headquarters in Vevey, they employ a lot of people and do a lot of work in other countries. If you're a Swiss bank mainly operating in Switzerland, mainly dealing in dollar assets and paying your bankers in Swiss francs, you're having a very challenging experience at the moment. There have been a number of redundancies in the sector, many of them kept relatively quiet, but it is an extremely challenging environment in which to work, and a number of banks are seeing their cost-income ratio go above 100%.
So finally, what do you see for the future of the strength of the Swiss franc?
Well, I do believe the currency is fundamentally still overvalued against pretty any currency you would like to mention, and I think that the currency will in time fall. I'm a great believer in looking at the Economist's Big Mac Index as a long-term trend. Switzerland has the most expensive burgers on the planet. That cannot last forever. But markets will often overvalue assets for quite prolonged periods of time, especially when if you're not going to be in the Swiss franc, where do you go?
Thank you, Mr. Plummer, for joining me today. It's been a pleasure to have you in the studio.
You're welcome.
And thank you to you as well for watching Dukascopy TV. Make sure you click back to the website for more interviews and updates. But for now, goodbye.